Fearless Disease.
Mark, the news flow this morning seems to be a lot about yields, things that will move bond markets. Certainly Isabel Schnabel getting the week started with something a little bit hawkish.
Absolutely. Schnabel is the news flow. That's the kind of the latest marginal development in terms of forcing yields higher. But the bigger, very much longer term macro backdrop is exactly as Ray Dalio outlined. We just have a world which is where we've got kind of overburdened with government debt and fiscal promises that we probably can't deliver. And that means ultimately we're going to continue getting higher yields and probably have to monetize that debt. And that fuels anti-fiat trades. It fuels kind of inflation because we're essentially trying to inflate away that debt in a controlled manner. That is the bigger backdrop theme. And that's going to be a big theme into next year. Now, this is a very choppy time of year, but I think in the short-term dynamics around that theme, not only do we have Dr. Isabel Schnabel's comments, but we have the Fed this week, which is expected to be a hawkish cut, and we have JGB auctions. So there's a few dynamics this week that might help it in the very short term.
Fearless Disease fam. Today we expose the truth they hate to hear. Like right now, if you are ready. I mean, it's basically it's a very good market today. Market's looking good this December. Traders are betting at least 86.9% on December's Fed cut as blackouts they start. S&P and the Nasdaq are drifting to records amid PCE cool downs. Everything is looking really well, especially in the Nasdaq. It's looking very well. And if you go on the side of US 30, now the forex pairs, they're actually trending the same exact way. They're going a little bit higher. Everybody's going up right now in the market, and it's looking real promising for traders right now. I would say keep your eyes peeled, but let's continue to see what this young gentleman has to say.
How important are the dots going to be this week? What are we going to learn from the dots? Are they useful going into 2026 with a new Fed chair coming in and so much uncertainty surrounding the US economic outlook?
They're not useful into 2026, but they're a massive tradable moment this week. This time of year is really interesting. Right? This is a great market for traders. People are alert to kind of mispricings. Part of the reason it's such a good market for traders is it's actually quite bad for the macro person. This is not the time of the year to kind of get involved in those longer term trades, particularly ahead of the Fed this week. And then after that, we get a decline in liquidity. So, people wait till January to get really involved in the macro trades again. But it's because of that. It's because that kind of declining participation from the macro community that for traders, there's real opportunities. And so I think the dots will be super interesting this week. But no, they won't last in relevance until the new year.
That makes sense. Like I said, it's a great time for traders. Usually around the holiday time, November, December, January is great for traders because you can get in and out of positions very fast, and liquidity is hit, and there's a lot of price action. So we're moving from one end to another really fast, really quick. So it's not really good for the big swing traders, the people that want to jump in buying stocks or doing long-term trades for weeks or months at a time. It's good for those quick day traders that want to get in, scalp, make some money, and go and get out and go enjoy their day. They'll keep their eyes peeled, but he's making a lot of sense.
Mark, we're getting some lines coming through out of China saying that President Xi says that they're continuously trying to expand domestic demand. And I guess some of the other news flow we got over the last 24 hours was around the export engine in China. No doubt, they seem to be able to cope with exporting less to the United States by just exporting to Latin America and Europe instead. I wonder how much that's going to be a dynamic that we need to keep in focus in 2026.
Yeah, I think it's an ongoing dynamic. One of the things that's really interesting this year is people get very focused on dollar yuan falling by the most in 5 years. That's purely a dollar trade. Dollar yuan is not a good measure of the yuan. It's a measure of dollar. It's a low beta proxy for the Bloomberg Dollar Index. In fact, the yuan on a trade weighted basis is having its worst year since 2017. So its worst year in 8. The yuan is depreciating this year against its trade partners, to most trade partners. And particularly you've seen the euro yuan trade, which is really fueling its exports. And that's why China trade is holding up so good, and that's why the Chinese stock market is an outperformer despite the fact they can't stimulate domestic demand. And I think that'll be a dynamic again next year because of the weak yuan. It'll help the Chinese stock market to outperform again next year, and it'll be an ongoing concern for the government as well to address.
Very true. That's why the Chinese stock market is really, I would say, skyrocketing, just like anywhere else. We're always going to be a positive around this time. People are buying things. People are starting to gear up for the next year so they can start investing a little bit more. That's why I love these times a year for traders. It's an awesome market. I would jump in as fast as you can. If you're a veteran in the day trading game, this is your time to shine. Make that extra money. You start the next year off strong in the green. My predictions, cuts land maybe on Wednesday, but the S&P to 6,900 by the end of the year easily. Paul signals it's gonna after that it may go down a little bit, but right now the position is volatility is going to win. Smash that like. The next video is going to be up on the video on the screen. Subscribe, hit that bell. The Cash App is always in the description if you want to support the movement. See you on the next one. Stay rich, stay fearless.